There's an example. E-commerce, for example, has an Amazon e-commerce fulfillment center employs, I think, 1,500 people in 3 shifts, so that can go up to 5,000, 4,500, 5,000 people. This requires ventilation, HVAC systems, cooling on top of the roof. If your roof doesn't have the load-bearing capacity for those ventilation units, it simply means that ultimately this warehouse will be very difficult to be occupied for this type of intensive e-commerce use. If you can't put them on the roof, you'll need to bring them down and put them somewhere on the yard. The yard is already too small, I'm losing parking spaces, and I need to go back to my planners to get building permits for those. I mean, everything just becomes suddenly increasingly complicated. So to answer your question, yes, things could get more expensive, but there are ways of anticipating this and making the right decisions up front. And I think those people who are doing this, or those developers who are into this, actually know what they're doing and sort of are starting to anticipate these types of costs and conversion options.
I think there's a couple of other points there. One is going to be, therefore, a lot of logistics can no longer be, as the Germans say, mit einer grünen Wiese. You've got to be near to population centres to actually get the staff. And if you don't have that, you have a problem. And the other issue still is that a lot of the operators are operating on very thin margins, and they really can't start pushing their rents up that far. In fact, in Germany at the moment, and particularly Western Europe, excepting perhaps the UK, there hasn't been really much rental growth. You can read the reports in the from the surveyors looking at rental growth, and you talk to the developers, and actually there isn't much real rental growth going on. What they have had is, since they've had this relatively large reduction in yields, they've played on that so that they've realised, having had about 125, 150% reduction in yields over the past 18 months or so, at least they can build, develop, get in tenants on relatively competitive rents, it's the €2 per square metre and others, and still make money on their trading because they've actually had this yield compression. But that has been, these are all issues that need to be addressed or are being addressed.
Apart from the e-commerce side, the rental growth vis-a-vis cap rate compression discussion is an important one to have. I think the one piece that I would add to this conversation is replacement cost, because there is a floor to this. It can't go on forever, and ultimately replacement cost and having a replacement cost justified rent is what is going to bring it back to equilibrium. So basically you can't have, if it costs you whatever, €700 a meter to develop, you can't have €2 net effective rents forever and have it not go up. Eventually you will have that rental growth. So I think over the long term, that will revert. And one other point quickly on Tristan I wanted to pick up on too, was this notion of, and Kristof as well, was the notion of functional obsolescence. So, you've got a building, you've made it through your 6-year term with your build-to-suit occupier, they decided to leave, now what do? Can you lease it or not? From looking at the experiences of a lot of the bigger investor managers during the 2008 to 2011 timeframe, it's my view that most of these people were really positively surprised by the tenant retention within their portfolios. Additionally, very positively surprised by the leasing activity for vacant space that was built at the peak of the last cycle. I remember not so long ago, in 2009, people were screaming, saying, wait, we have this horrible asset that we just built spec. What are we going to do? It's never going to lease. And then lo and behold, 6 months would go by and someone would put up their hand and they'd say, well, no, actually, we leased it. And that happened again and again and again in so many markets throughout Europe. It doesn't necessarily mean that those are great locations, but I think that the resiliency of the tenant demand within this sector really surprised a lot of the people who are closest to the assets on a day-to-day basis. And I think that's really important when you think about what we're talking about in terms of e-commerce.
Okay, good. One footnote to the again to the yield and rent discussion. So what you see in the market is yields have compressed massively, and as a consequence there is pressure on the rents because developers can offer buildings with the lower yield. They can be more competitive on new buildings, but the net trend is still positive capital value growth. It only is yield compression would suggest, if you go from a 7% yield to a 5% yield, you would expect maybe 30%, I don't know what the number exactly is, 30% capital value growth. Well, we're not seeing that because some of this flows back into cheaper rents, but we're still seeing net positive capital growth very steadily over time. And on the back of that, like what Logan said, it's also the replacement cost and the construction costs that are going up because the buildings do become more expensive, the land becomes more expensive, you have to insulate them more, they are better from a sort of a heating, environmental point of view. So all of these cost factors are also driving that value up. So even if you see a bit of bumps and swings and ups and downs in rents and yields, you would have bought a building for 500 euro a meter 10 years ago, and it's probably worth 700 euros a meter right now, and it'll probably be worth 850 in a couple of years. So there is a very steady trend there. It's just that there is chaos introduced with the yield and rental movements around it. But the two factors compounded are fairly stable.